Hey guys, Gil Stokes here. Welcome back to another episode of the Trading Coach Podcast. And since this is another video episode, welcome back to my YouTube audience as well. In a previous podcast, we talked a lot about how to perform a proper annual or year-end trading review to close out your year. Today, we're going to shift gears and focus on what you should be doing to kick off your new trading year. Now, before we hop in, I do want to remind you, either pause this and do it right away or make sure you do it right afterwards, to go back and watch my most recent weekend trading edge video titled Most Traders Blow January, How to Trade the First Week of the New Year Safely. And no, this title wasn't a clickbait title to scare you or whatever clickbait stuff is supposed to do. I am dead serious, and I've already received messages from multiple traders, no exaggeration, saying that they've blown their account in the first week of the year already, and we just started. It's January 6th. Like, what are we doing here? Anyway, with today's topic being goal setting, I just want to remind you guys that it's really hard to set goals and ultimately achieve goals if you've been knocked out of the game already. So conservation of capital is key. Don't get caught up in kind of the New Year's junk that's going on. Patience pays, especially with everything that's going out there with wars and non-farm payrolls and all the other stuff that's happening in the world. Just be safe. Anyway, today I am going to give you 10 trading goals that I think should be on your to-do list for the new year ahead. And I want to make this a little fun first and foremost, and maybe gamify things a bit. So here's what I want you to do. As we go through the list, I want you to keep track of how many of these goals you either already do or at least planned on doing. Then, at the very end of this episode, let me know your score. You can leave it in the comment section under this YouTube video. I'll do a YouTube poll on the community tab, or maybe a poll for you Spotify viewers underneath the Spotify video. But I do think it'll be interesting to see how many of us traders kind of share the same goal and kind of where you rank between those. I don't know. Trying to have fun with these shows. Now, before we hop into the list, we need to talk about the two main types of goals that there are. There are going to be results-based goals and there are going to be process-based goals, right? Results-based goals are also known as outcome-based goals. These are goals that focus strictly on the outcome. So what was achieved? Some examples are like, my goal is to achieve a 55% return on investment for the year, or my goal is to finish the year with a 65% win rate. Now, don't get me wrong, results-based goals matter because they give us benchmarks that ultimately help us evaluate our performance, right? The problem is that these benchmarks or these achievements, they aren't fully under our control, right? Here's a simple analogy for you. So let's say I hit the perfect drive in golf, which is something I absolutely never did. But in my hypothetical world, let's say I did. And let's say it comes off the tee, it's going well, and then it just hits a random bird in the sky and then drops into the water hazard, something that I did do on a regular basis back in my golf days. Well, now I'm taking another penalty stroke because it was in the water. It's probably not as far as I originally planned on it being, so another stroke to get to the green. And instead of, let's say, getting a par, I end up with a double bogey. Now, here's the question. Did I do anything wrong? No, my actions were perfectly executed, right? I drove the ball the way I wanted to drive it. It was just bad luck that it hit a bird, fell in the water, and then it added to my score. But when you look at the results, when you look at that scorecard at the end of the round, well, that double bogey is on there, and it doesn't explain necessarily what happened to get that double bogey, right? The point is, right, that's the tricky thing about numbers, right? They don't make excuses, but in real life, we sometimes need explanations to know whether something was our fault or did stuff just happen. And Lord knows in trading, we see this plenty. Now, on the other hand, process-based goals, right? These are going to focus on controllable actions. So actions that we can actually control. And for these, the idea is simple, right? If you build a strong process, and in trading a process that gives you the edge, so a statistical advantage over the market, and then you follow said process consistently, well, the results should, and in most cases will, eventually take care of themselves. Now, keep in mind, we're talking law of large numbers. So you can follow the process. I had a trader this morning. We opened up our live room for the first time in 2026. And one of our traders typed in and said, "Hey, Akil, fired off my first live trade this year." And I'm excited. I'm like, "Yeah, there we go. That's what I'm talking about." Before reading the rest of the sentence, he said, "And it was a loser." I'm like, "Oh, I'm sorry." But the trader was excited because he followed the process 100%. So we jot that down as a good trade. And I say that to tell you that, we can have the perfect setup. We can do everything perfectly, but we can fire off a trade and it might hit a bird and fall into the water, or it might just lose, right, in the short term. But, and I'm going to bounce back and forth between the golf analogy and the trading analogy, but if I hit that perfect tee shot 100 times, 99% of the time, it's going to do what I want it to do and not hit a bird. Same thing, if we take trades the way that we're supposed to do it, we're not going to win 99% of the time, but in the bigger picture, we're going to win, monetarily speaking, more than we lose because what we're doing has an edge. So if you lay out a profitable process and follow that profitable process consistently, bigger picture, you should end in profit. But even more important than the profit, although you're saying, "Keel, what could be more important than the profit," right? Process-based goals, they help us identify weaknesses. They help us spot patterns, and they help us to continuously improve, all of which is critical if we want to continue to grow as a trader. So most of today's list will focus on the process-based goals, but we are going to sprinkle a few results-based goals in there as well, because at the end of the day, right, we are trading and trading is fun and we want to be process-based, but we are trading to make profit. So we do have to ensure that we measure ourselves on that scale as well. So goal number 1, follow your plan, ... consistently, right? And that last part is very important. Congrats, applaud for you, tap yourself on the back if you already have a trading plan, because honestly speaking, most traders don't. But here's the thing, a plan is only powerful if you actually follow it. So make it a goal to follow your plan on every single trade, win or lose. One thing that I highly recommend is tracking your good trade rate. So it's not whether you won or you lost, but judging yourself off of whether you executed it correctly. And that's looking at the full scope of the trade. What's cool about that as well is it kind of gamifies the process, and bigger picture gives you a much bigger idea of your progress. And when you can gamify the process, you tend to focus on it more. You get distracted by the P&L and all that other stuff, and that's going to help you cut down on your psychological mistakes. So it's kind of a 2-for-1 type of deal. Goal number 2, journal and review your trades. And I probably should add ... consistently, right? So we talked about tracking process. Well, how do we track our process? By journaling and reviewing our trades. I shared this graphic on my Instagram stories recently that showed, and I'll try to explain it to the audio-only audience. It showed pretty much a spiral of red lines, like going in a circle, and underneath it was the caption, "Every pattern in your life repeats until you learn the lesson." Then on the last spiral, it kind of whips away from the circle and ventures off onto the right side of the screen with an arrow and whatever like that. It goes away from the cycle of death. And there's a caption under that says, "The moment you choose differently, the loop ends and growth begins." Now, what that actually means is that if you keep doing the same thing and expecting different results, yes, you are insane. I believe that is the definition of insanity. I don't know if that's the Webster's dictionary definition, but everyone says that's a definition. So we're going to run with that on the Trading Coach podcast because we believe in following what else everyone says. Anyway, back on topic. In trading, remember, we are our own bosses and we don't have outside auditors. So if we don't journal, if we don't review, we're never going to uncover that information that is needed for us to improve. So it's not fun, it's not exciting, it seems like mindless paperwork unless you're really nerdy, but it is something that we have to do. Goal number 3, avoid emotional decisions. consistently, right? This one doesn't need much explanation. And I would actually say this, it's not avoiding technically emotional decisions, but going back to the podcast on revenge trading, if you remember the book that I had, I'll use this book. Ooh, what a great book, by the way. Jason Graystone's Always Free book, 6 years in the making. Remember that we're not necessarily trying to destroy our emotions. We're putting up a block between emotions and actions. That way our emotions don't lead to actions. But you guys get what I'm saying. Avoid emotional-based actions. Maybe I should say that. Anyway, emotional mistakes, your fear, your greed, your overconfidence, your revenge trading, these can destroy months and months of good work in a matter of minutes. How do I know? Because I've been guilty of that time and time again. Not recently, but back when I was in my weird, wild, younger days, right? And speaking of which, if revenge trading is something that you're struggling with, again, go back and watch the previous Trading Coach Podcast episode 1262, right? Where I give you guys kind of 3 tips on how to handle that, as well as dive deeper, of course, into the why revenge trading starts in the first place. I'll give you a quick preview. It's you. All right, goal number 4. Yes, I'm going to blame you for everything. Trust me, we need to accept accountability. Goal number 4, implement a strict money/risk management process, rule, whatever you want to call it, right? Believe it or not, most traders still don't have real risk management rules or don't use real risk management rules. And yes, some of you still don't use stop losses as well. Come here, I should choke you. But the market will make you pay much more than the pain that I can inflict on you anyway. And I'm not even gonna waste my time on getting into that. But your risk management plan should be just as important as your trading plan. And there should be a risk management plan inside your trading plan. So things that you should know and things that should be rules based. How do you place stops? I'm not literally talking about like what buttons do you push to put a stop loss on your chart, although that is important as well. But I'm talking about what is your methodology behind placing stops? What are you using? For example, I use an ATR multiple beyond levels of structure. If you look at all of my trading strategies, they're all the same. I find a level of structure, I find the ATR multiple, and that ATR multiple goes behind either the level of structure or the entry reason for the trade, right? That is my how for placing stops. You can use stuff like Fibonacci's, you can use stuff like an indicator, a Bollinger Band, what have you. You need to know why you're doing it. Another thing you need to know is why are you placing stops? And I guess that kind of combines with the how. The how is the method. The why is why are you using the method that you're using? So again, I place stops beyond structure because structure is the spinal cord of my trading philosophy, and I believe that pretty much everything I do revolves around structure. So because it is an important level that tells me my idea is either valid or invalid, I want stops beyond it, because once we get beyond it, that is the market telling me that I'm wrong. And once I'm wrong, I need to be out. So again, it doesn't have to be structure, just using it as a personal example, but you need to know why, or you should be comfortable from a psychological perspective of why you're placing stop losses. And then risk management wise, of course, you need to know how much are you risking per trade. So many traders are out there just placing random amounts of orders. Ooh, that looks fun. That looks good. Ooh, this trade feels good. Let me risk more. That is stupid, right? Now, if you have a way to quantify that, so like for you guys that are familiar with our CTS system, our combined technical scoring system, what we do is we rank a trade from, 0, which would be a no trade, obviously, to like 13. And these numbers can be different depending on what's in your deal. But you can break it up where you say, hey, if I have a trade from 0 to 5, I take half position because it's not a great opportunity, but I still want to be involved. You can say, hey, if I have a score from 5 to 10, I take 3/4 of a position because that's a good trade. And if it's from 10 to 13, then I take a full position because that's the best of the best trade. So you can do it like that. But as you can see, that is still a rules-based plan. It's not random. It's not off of think and feel. It's off of decisions that you have made based off numbers that you have acquired from lots and lots of digging into previous market data, aka backtesting. So you got to know how much you're risking. You got to know your position sizing strategy as well. And most importantly, you have to do it consistently, not randomly. Goal number 5, Hadouken, right? You don't want to be a jack of all trades and a master of none, right? It sounds good, and a lot of people want to do it because it boosts their ego, and we know from the last podcast how bad ego is for you. But in reality of trading, it will get you killed, right? If you don't know what you're doing, you're going to get destroyed out there. And don't get me wrong, right? I am a big fan of learning, a big fan of experimenting, exploring, all of that stuff is fine. But as you get closer to live trading, you need to narrow your focus and focus on a primary strategy. Before recording this, I literally had this conversation over on the Tier 1 trading platform with one of our community members where I had previously, she came to me, she's like, hey, I don't know what to do. I need guidance. And like I tell most of the traders, I said, hey, work through all of the courses, right? Sample all of the different strategies that we teach and figure out kind of, just get experience with them all, let's say. So when we caught up a little bit ago, she was telling me that, hey, she did what I asked her to do. She went through all the courses and she's looked at her life schedule as well. And she started to kind of narrow down what she could or couldn't do. She's like, hey, day trading is going to work for me. I can't make that time investment, but I do like maybe a swing trading or a once a day type of deal where I can spend, like blank amount of minutes on the chart, find what I need to find, and then go back to work. So I said, that's awesome. Now, what about the strategy? Have you made any kind of progress on finding a strategy that works for you? She's like, well, not really. And I said, hey, so how about you do this? When you went through the course, go back through the course, think about what you learned. Was there any strategy that stood out to you? Meaning, was there one that you picked up really, really easy? Meaning, like, we all know this, right? When you're learning stuff, sometimes you got to go over things like 4 or 5 times because you're like, oh man, I read it, I heard it, I don't know what the hell he was talking about. But then sometimes there are things where it's like, oh yeah, I get that. Typically the things where you're like, oh yeah, I get that. Those are the things that are easier for you to understand. And it's not a bad thing to start with something that's easier to understand because it's going to help your learning curve. If it's going to take you a million years to actually figure out the ifs, hows, buts, and whys of something, it's probably not a good strategy to start with because it's confusing and it will just slow down how long it takes you to learn it. If you find something where it's like, oh, I get that, that's easy, boom, I can start right away. Well, now you can start right away, and that starts all the rest of the process right away as well. Another thing you want to do is find something that seems to connect with you, something that you like. Hopefully by the time, and we tell our traders, as you go through the course, you start to learn about yourself. Like, am I aggressive? Am I conservative? Do I believe in like trends and extensions? Do I believe in reversals? Am I a pattern trader? Do I like consolidative stuff like that? Do I like indicators? Do I like price action? You learn all these things about yourself and you kind of get an idea of what you like and what you don't like. Again, I love using the buffet analogy because it's one of the best. As you go through the buffet, you sample different things and you're like, ooh, that's good. I might come back for more, or like, ooh, that's nasty. I'll never see that again. So you take the things that tasted, ooh, that's good to you, and then you kind of figure out which one of those you want to focus on. And she ended up kind of focusing on, I believe the FTB strategy is what she's going to work on. And I gave her some advice on, hey, test out these other elements of it as well, just in case. The point is, right, she's focused on finding a strategy, and now that she's found a strategy, she can kind of narrow her focus, right, point all her energy in that direction and really dig into what's needed for the next steps. So if you're new to trading, yes, take time to learn multiple things, do that by all means. But by the end of the year, I would make it a goal to kind of figure out, hey, next year, 2027, or this can happen anytime mid-year, whenever you have your goals and whenever you find what you need to find, but make it a goal at least by the end of the year. I want to be able to tell myself that I'm going to focus on this strategy. That way I can start the next part of the process. And if you're a veteran, you can do the same thing, right? You may already have a strategy that you're consistently trading. Why not expand your portfolio, right? Add a new asset or add a new strategy in your own right. That brings us right into goal number 6, which is continued education, right? Education just isn't for beginners, right? Veteran traders need it too. Continued education can mean a lot of things. It can mean taking a training course. It can mean reading a book. It can mean, finding a new podcast series to listen to. It can mean doing a deep dive on the internet into a specific topic. It could be back testing either a new strategy or a new asset class. It could be developing a new strategy in your own right. Strategy development for me is actually my favorite form of continuing education. I've done all of them and I kind of try to rotate years with them, but I love strategy development despite most of my ideas failing miserably. Stick with me, it makes sense. Because even though it fails miserably, right? One, it gives me experience with different indicators and different price patterns, and I can kind of see what I like and what I don't like. It also allows me to see what works in certain scenarios and what doesn't work in certain scenarios. And although only a handful of the strategies that I've attempted to develop have worked in its own right, my trials and errors, my experience in developing different strategies have actually allowed me to make additions to my main trading strategy, or have even helped me in creating new strategies because I already kind of have a cheat sheet of like, this ingredient sucks, this ingredient is good, and it's just kind of how we put them together to make it work. So I think it's extremely educational. You learn a lot about the market during that process. And it's 100% probably the most important thing that I've done in my long-term growth as a trader. Goal number 7, right? Lucky number 7. Improve your lifestyle habits. Something that most traders never talk about because we don't think it matters, because it's not directly related to making profits, but it actually is, because you are your business. If you are not healthy and happy and sane, your business is not going to be healthy and happy and sane. I never thought about it that way, did you? Trading can absolutely wreck both your mental and your physical health. Hours in front of the screen can mess up your vision. I had no glasses when I first started trading, and when I got to the point where I was kind of all in my trading and investing like 18 hours a day, I burnt my eyes out, and now I wear said glasses and get bullied by all my friends who call me Four Eyes. But I'm stronger than them, so I just threaten them and they stop bullying me. See? That's why I need to get in the gym and get buff, so you can take down your bullies. Anyway, this poor vision, right, it jacked me up, right? I remember having headaches, I remember having migraines, I remember feeling like tired and sluggish and my eyes burning all the time. I had poor posture as well. I'm standing today, which is actually going to work perfect for this subject. But usually I was at a whatever lumpy Walmart desk. You guys have seen the video or the picture before on social media. And I'm at a computer like this for, again, hours and hours and hours. And I started having aches and pains. I've already got back problems from playing American football for a very long time and getting hit by big Neanderthals. And it messed with my body. And that's not to mention the stress, right? Believe it or not, right? This is not a lie. Yours truly once had long, flowing, luscious hair. It was kind of like, like that guy Thor. You ever see that guy Thor? I pretty much looked like Thor. Yes, if you can imagine that. No lie. I'm not embellishing at all. I would never do that on the podcast. My trading name in the chat forum was actually Thor because, I looked like Thor. God of stop loss, I guess, at the time, because I sucked. But anyway, it turned that long, luscious Thor hair into this, the Golden Dome. But physically aside, because we're not shallow around here, mentally, trading brought me woes as well. It brought me anxiety, right? Lots of anxiety. It brought me depression. It brought me frustration, and you name the rest of the stuff that it brings. It brought me all of that. And speaking of which, I highly recommend, there's this book series called The Winning Edge. And I think it was volume 4. I don't remember. I read this a really long time ago. So it could be, I only have volume 1 and volume 4. I could never find the middle 2. But this was a great book. And one of the only books I read at the time that was trading related, but also discussed how your personal issues overlapped with your trading performance. And it was something that I needed to hear because I just never even thought about that. It also gave me a really, really scary story about taking your trading home with you, meaning how the stress of trading can actually ruin your personal life. So it kind of works both ways. So if you get a chance, read it. It's a really, really good book. If you can find 2 and 3, let me know about it. I'd love to read those as well. Let's put this bad boy back in there. Pitbull's a good book. I don't mention enough either. Anyway, the bottom line is this. The better you take care of yourself outside of trading, the better you will be inside of trading. So sleeping well, getting enough hours. I got another story for you real quick because it's my podcast. I can do what I want. This actually overlaps with a conversation I had with a trader on the platform the other day. So one of our traders, I believe it was Scott, shout out to Scott, right? Asked me the question about trading very specific hours. He was like, hey, I want to trade these hours, but what do I do how do I know if my strategy actually performs better during these hours, right? I think one was like 7 to 9, and another one was like 9 to 11. And I said, well, easy solution, right? As most of my solutions are. What does your backtesting results say? I just put out a shorts episode the other day where it's like 99% of all the questions that traders ask could be answered by saying, what does your backtesting say? And then that is 99% of the time, that is correct 100% of the time, right? But I remember back when I was trading some mechanical strategy, probably the SOS, strength to signal strategy, and it was a mechanical system where there was like moving averages and indicators doing things. And this was when I was younger and I felt invincible, and I was like, hey, I'm all about the profit. So I'm going to do whatever it does to make profit. So I tested that strategy 24 hours worth of signals, right? And what I was going to do is I was going to handpick the hours in which it worked the best. So there was a period between, I think, like 5 o'clock and like 10 o'clock where it worked well, 10 or 11, somewhere between that. Then I think from like 11 to like 1, it sucked, right? And then from like 2 to like 4, it was good again. And then from 4 to like sometime at night, like it sucked. But then there was this really high win rate at like, sometime at like either 2 o'clock in the morning or 1 o'clock, something like that. So of course, me being young and invincible at the time, I said, hey man, I'm going to wake up 1 o'clock, wait for these signals, and then go to bed at 2, and then wake up again for the 5 o'clock, the London, right, open, and or not London open, but close to London open my time, and then, or I guess London mid it would be. Anyway, that early London session for me, and then trade it again. And it worked for all of like 3 days, and I learned the value of sleep. You would think I would know that from being an athlete, but yeah, the going to bed at 10 o'clock, and then waking up at 1 o'clock, and then trying to go back to sleep at 2, which it takes like an hour to go back to sleep because once I'm up, and then waking up again 5, I had 0 sleep and my body was like depleted and I couldn't even see the charts, right? Everything was like blurry and moving around, and like that's how I learned it was although in my mind it was beneficial to trade 24 hours, in reality it actually made me a worse trader. So for you guys that are out there believing the time versus money myth, where it's like the more time I spend in the market, the more money I'll make, I am an example of why that is not true. Yes, I spent more time in the market, but I spent more time in the market unfocused, which means I just made more mistakes and I actually lost more money. So learn that lesson the hard way. But I also learned that sleep is very important because my body started malfunctioning in weird ways that I don't feel comfortable saying here on the podcast. So sleep well, that's important. Exercise regularly, right? What do I tell you guys after the live room every day, right? I go and work out. I went to the gym today right after the live room, or a little bit afterwards, after I checked some orders that were on. And I worked out. What this does is that fires off that dopamine, the brain's little happy drug, but it also allows me to disconnect from the markets, right? Whether we know it or not, we have a lot of stress when we're actively involved in the markets, right? I've been watching the movie F1, and like it puts a POV of them in the race car, and like it seems stressful the entire time. I couldn't imagine driving an Indy car, right? I think it's stressful driving around these streets, right? Going that fast, it seems extremely stressful. Trading is very similar, even though it doesn't seem like it, right? You are always scanning, always focused, always looking for something. You're in this kind of high stress environment. You need to give yourself a break from that to allow yourself to reset and not go mentally crazy. So for me, Exercise does that. It also allows me to get some rage out if I have a bad trading day. I particularly schedule my boxing days for days when I have losing trades so I can punch something really, really hard and yell instead of breaking computers. And I guess that goes hand in hand with, again, step away from the charts. If you're not a exerciser, just step away. Take some time, go away, do something else, and come back re-energized and refocus. But take care of yourself and your trading will take care of you. Now, before we go into goal 8, I just want to kind of talk about a few things regarding goal 7, a few things that helped me because I'm anticipating you giving me the questions. So something that helped my vision was this. One, I got blue light filters in my glasses. 2, I put a blue light filter on my monitors. Now, I use something called, I think it's called Get Flux. I believe the new Windows, I think, has it everything already installed on it. But I know to Get Flux personally, what it does is you can program kind of when you wake up, when your peak hours are, when you go to sleep. And what it does is it adjusts the light per your cycle. So when I'm up 5 o'clock in the morning, I don't just wake up and boom, beamed with like bright screens. It's this yellowish tint in the beginning. I'll get back to that. Yellowish tint in the beginning. And then as the hours go on, it works its way up to kind of the regular lighting when I'm fully awake. And then at night, right, it kind of reduces it again. Now, the yellowish tint looks weird for like the first 2 days. I don't even notice it anymore. And what I mean by that is like I'll bring friends over to look at charts or look at, my friends come over and I make them look at charts. That's exactly what I do. We'll look at something on the computer and they're like, dude, like, why is your computer like yellow? I'm like, what are you talking about? Like, I don't even notice it because I've adjusted. So, but I think that's 100%, and that's free too, Get Flux. That's 100% helped with my eye strain. And again, Get Flux is free, but I think Windows or whatever, I think most things have it now automatically, but make sure you have that program to go on. 2, you can't see it, but I'm at a standing desk right now. This is a Veridesk. I've had 2 standing, I believe it's a Veridesk. I had 2 standing desks in the past. I had one that went right on top of my regular desk, and I had to kind of like lift it up. This one, because I've gotten old and lazy, I just push a button and it goes up, it goes down, and I can, more importantly, I can actually put it at the correct height for me. So again, with a regular desk, maybe you're adjusting your chair, you find yourself in a slouching position. If I notice that, I'll raise it up so everything is kind of eye level. That's helped with my posture. I do get lazy and sit down a lot, and then I get back pain, and I realize I should be standing again, but that's helped with posture. And another thing is just having the right trading setup. I did this in a video the other day about how many trading monitors you should have. I'll link that below or at the very end of this video, but I had a massive setup where I was like here and here and here and here and here and looking all over the place, and I found myself getting a lot of neck problems. So I reorganized my setup so everything is in viewing distance. I can see all 4 of my monitors without even moving my head. That's helped a lot. Speaking of monitors, this is going to be a little bit of a shameless plug, so bear with me for a little bit. If you're interested in buying monitors or interested in kind of knowing what type of monitors are best, what type of stuff needs to be inside your computer as far as trading specs go, check out this free guide by Easy Trading Computers. I bought both of my systems from them, right, 10 years ago and then I think 2 years ago. But it's a free guide. You will learn a lot, whether you want to build your own or whether you want to have them build one for you. But link or QR code, scan it, check it out. I share it because it's 100% helpful for me, and I do want to pass that forward to you as well. All right, goal number 8, achieve consistent payouts. Now we're moving into the results-based goals. If you trade for a prop firm, a great goal is to, 1, if you haven't done so already, pass your first prop firm challenge. And 2, if you've already done step 1 and you're already funded, receive consistent payouts throughout the year. I guess the same can apply for independent traders as well if you're at this stage, but specifically for the prop firm traders. Again, treat your trading like a business. Congrats on getting to that point where you passed that challenge. Now don't settle. Let's make a goal to get those consistent payouts throughout the year and start growing that account that way. Goal number 9 will be account growth, and this could be for maybe more of the independent traders. I guess it could be for both prop firm traders as well, because I'm assuming that although you are trading with the prop firm, you also either have your own account or aspire to have your own account. But you should be focused on compounding. You should be focused on account growth. I think that is a very solid goal. And this could mean different things if you want to kind of make it rules based. This can be, in general, I just want to increase my account size. I want to finish at a higher level than what I did when I started. This can be reaching the next position sizing tier, right? For you guys that are over at tier 1, we teach this this position sizing strategy. We use a position sizing strategy called smooth ratio money management, where there are different tiers that you reach, and after you gain a certain amount in your account, you're allowed to trade a little bit more, and it multiplies it so that you can accelerate your wealth really, really quickly. But a good goal, and one of my goals was always like, hey, can I reach position sizing 2 by the end of the year or by the end of the 18-month period? Because I was very kind of conservative with my approach. Also, account growth can be for outside of trading as well, now that I think about it, right? We talk about growing your account, and that is the main goal of trading, because if you just follow the process correctly and you do the same thing, if you get the same return on investment, what's stopping you, or what's going to allow you, I should say, to make more actual profit is just having a bigger account size, right? I forgot what video we spoke about this in, but if you can make a 40% return a year with $1,000, it's not going to seem like much, whoop-de-doo. But if you can make a 40% return a year with a $100,000 account, all of a sudden you're like, oh, whoop-de-doo, right? So it's the process is the same. You're just doing so with a bigger account. So that should always be the goal. So when it comes to account growth, you can look at it from inside of trading. You want to make profit, roll profit back into your account and grow that way. But you can also put together a personal plan to grow your account as well, meaning that maybe you clean up your finances, right? You start spending less than you earn, and that extra money that you have left over can be put into your account on a monthly or a quarterly basis. Maybe you get a secondary job. You're picking up a few extra hours being an Uber driver, or you're selling stuff on the internet, and you pick up extra money that can be used specifically to fund your account. That is another goal as well. I had a guy that was like, hey, I'm going to be an Uber driver for a year, because if I can earn enough during that year to bring my account from A to B, then after that, I'll have enough to do whatever his goals were of trading. So it's not just inside of trading, it could be outside account growth goals as well. So that's it for the podcast. Oh, wait a minute. I know what you're saying. Nikhil, you said we had 10 goals and you only got to goal number 9. What could that 10th goal be? Well, here's where you come in. I want you guys, you, the audience, you guys watching and or listening, to create the 10th goal. And what I'm going to do is this. I'm going to put a pinned comment under this video that says, what is your trading goal? Ideally, it is something a little bit different than the other 9 that I mentioned, but I want you to type it in and share it with this community. And if you're uncomfortable doing that, or if you're on a different platform, just DM me whatever your goal is, and I'll type it in for you. Fact of the matter is, we want the Trading Coach podcast to be kind of a community, right? We have a great community at Tier 1 Trading, but I started the Trading Coach podcast because I understand that not everyone can afford to be in that community. And this is something that still allows other people to have a place where they can connect and learn from other traders and progress. So the more stuff we do that kind of brings us together and shares ideas, well, the more traders that we can reach, and well, that's the ultimate goal. At least that's my ultimate goal. So do me a favor, drop your goal into the comment section below, and also make sure you read through what other people are sharing, and you may be inspired for a brand new goal that you can implement this year as well. So I hope you guys enjoyed the show. Bonus goal, make sure you make it a goal to check out the Trading Coach podcast on a regular basis. We drop 3 episodes each week. Sometimes they're videos, sometimes they're audio, sometimes they're both. So make sure you're following here on YouTube. Make sure you're following on Spotify, Apple Podcasts, wherever you get podcasts at. All right, time for me to fuel up. Until next time, plan your trade, trade your plan. Take care.